This is the DeFi Decoded podcast by 9 Point Partners in cooperation with Prophecy DeFi. The ideas and opinions expressed in this podcast should not be taken as investment advice. Always consult with your financial advisor before investing.
Hello and welcome back to another episode of DeFi Decoded. I'm Alex Tapscott here with co-host Andrew Young. Andrew, it's been quite a week in crypto. There's been some positive developments, some troubling developments. We're going to get into all of it, talk about the recent announcement from the US government that Tornado Cash, an open source mixer, which helps to anonymize transactions in crypto, is subject to sanctions, as well as the news from the Ethereum community that there is a growing faction of miners who are interested in maintaining an existing version of the Ethereum proof of work chain. And then finally, as we're recording, we just got the inflation print out of the US showing that there was 0% inflation growth in the last month, but that overall inflation for the past year has come in around 8.5%, which is down from last month, if only slightly, and has markets basically going risk on right now. The yield curve is steepening pretty significantly. Tech is catching a huge bid, crypto along with it. So let's get into it, Andrew. Why don't we start with the last point on the macro? What's your take on this recent news?
Yeah, I think a lot of people, this sort of shocked expectations with a 0% month-over-month growth in inflation. I believe expectation with overall inflation of 8.5%. I believe expectations were around 8.9%. So I think at this point, I think most people expect the Fed to raise in September, which is the next time they meet. But and whether that's 50 or 75, I think the expectations right now are 50. But a lot of people are looking to December and thinking that if we get a couple of inflation prints that are lower than expected, then the Fed may essentially stop raising at the December meeting. So I think that's what a lot of people are sort of trading at this point, as well as maybe the September meeting being either 50 or maybe even only 25. I believe current expectations are 50. So, and obviously, as we've talked a ton on this show, crypto in particular is a long duration asset. So it, for the most part, we don't have earnings in the short term. So the discount rate that people apply to crypto prices is incredibly important to determining what the fair value of the price is. So if we, that's why, sort of contrary to what people would think, we're incredibly dependent on what interest rates, where interest rates are, given that we're such a sort of risk-on, long duration asset. So I think overall, though, from what I can see, the volatile elements of inflation decelerated quite a bit, gas prices in particular, as well as food. But then core inflation has actually remained stubbornly high, which sort of maybe suggests that there's a sort of a lower bound on what inflation can come down to, given that core inflation is still sort of 6%. So even if sort of we get a continued deceleration in the volatile elements, which can happen very, very fast, like we just saw this month, there still seems to be sort of a lower bound on what it can fall to, which is still quite high at 6%. So I think overall, I mean, it's good. It's good for the crypto market that inflation is coming down, but I would sort of hold our horses a little bit. I don't think we're quite there yet in getting to the point where the Fed is going to have to stop raising rates. I don't know. What do you think about the sort of inflation print?
Yeah, I think everyone was just searching for any kind of good news here. And so even, a modest beat, I guess, with it coming in lower than expected, has caused, huge relief rally. Though we have seen sort of the second derivative of the inflation numbers looking better over time. And that would basically be that the growth in inflation is decelerating, or has been for the past few months, right? So we had that second derivative effect. where, it wasn't steepening in terms of growth, it was slowing down. And now we've got this first, moment when it's actually rolling over. So I think that they say one data point doesn't make a trend, but actually this is the latest data point in a few that does show that overall things do seem to be abating a little bit. I think on your point about the core numbers, yeah, I mean, I think it's too early to say. This time it's remained stubbornly high, but we may see that also start to roll over at some point. On the volatile things, though, we could see that reverse. I mean, oil markets still remain really tight. We do some really great work at 9 Point actually looking into that. And so, if you could see the price of oil rebounding into the fall, especially given that the economy is, if it's in a recession, it's probably one of the mildest ones ever. Then all of a sudden those volatile numbers could tick up. So yeah, like you said, too early to say. Also, it's worth pointing out the next CPI print is like 5 days before the Fed is set to hike rates. So even if, we're pricing in 50 basis points in September, within a few days of that announcement, it could, reprice to 75, and then we could be in a different situation. But you know what? I'll take it. It's a light, light trading in the summer, people looking for good news. I'll take it. So what else is going on out there? There's the merge that keeps on merging, or the news that keeps on giving. So just by way of background for people, this fall, probably, hopefully as early as September, Ethereum's main chain is going to merge with the Beacon chain. It's going to basically transfer over from proof of work, energy intensive, mining process that uses GPUs, to proof of stake, which has a significantly smaller footprint, is probably more inclusive, and also may help to scale Ethereum. So it's a really important next step for the network, but it is not everybody's happy about it. And there's one constituency in particular that has raised some concerns, and that's Ethereum miners. Andrew, do you want to just describe what's going on here?
Yeah, so essentially Ethereum miners who currently generate mining rewards from mining Ethereum, when Ethereum, after the merge, and Ethereum moves to proof of stake, their machinery will effectively be useless for mining Ethereum. So this is a huge sort of capital cost for them, as well as just earnings loss. And clearly, so they've made some, like, miners in the past have made some sort of, they've made a bit of a stink about the merge, but clearly this upcoming merge date, which is September 19th, is actually very realistic. And so miners are actually incredibly worried that this time the merge will actually happen, because the merge has been delayed multiple times. And so now the miners effectively are trying to create this idea that there'll be a fork of Ethereum after the merge. There'll be Ethereum POS, which is where I would guess 99% of the activity, actually almost 100% of all applications, stable coins will move to that. And then there will be this Ethereum proof of work, like the sort of the original chain, which will survive as well. I don't really know why, to be honest with you. Like, I think, to me, this is all kind of stupid and sort of a retail trap. It's just going to be, there'll just be this like another Ethereum Classic. And so for people that don't know, Ethereum Classic was essentially created when Ethereum was forked after the DAO hack, when I believe about 15% of all Ethereum was invested into this venture that then got hacked. And so they effectively forked the chain into two. And Ethereum Classic, so if you owned Ethereum, you also got Ethereum Classic. And Ethereum Classic to me is really stupid. Like, I don't see any point to it. I didn't see a point to it 5 years ago when I sort of first got into crypto, and it still doesn't have anything. And so I think that's what this Ethereum proof of work will be. It'll just be another kind of useless fork. But I don't, like, I guess, what do you think about this? Like, I don't, to me, I just think it's something, if it's kind of like if you own Bitcoin, you got a Bitcoin Cash dividend when Bitcoin Cash was forked. And if you were smart, you sort of sold it right away, back when it still had value. Now Bitcoin Cash is, I think, pretty much worth nothing. Same with Bitcoin Satoshi Vision, as well as a number of other Bitcoin forks.
Yeah, well, they're worth nothing relative to the main, thing. So, Bitcoin's market cap is 400 billion, but Bitcoin Cash's market cap is 2.5 billion. And Ethereum Classic actually has a market cap of 5 billion. Now, that's not to say that they're useful or that, long term they have, strong value proposition, but they do weirdly retain a lot of value. There's a lot of like, meme value, I guess, to them. I think actually that Ethereum Classic and whatever this is, Ethereum POW, are quite different from each other in one important way, which is that Ethereum Classic, I think it might be helpful for people who are listening. So many years ago, like 2016, I believe, the first ever sort of on-chain thing that got launched in Ethereum was a thing called the DAO, Distributed Autonomous Organization. There are lots of DAOs today, but this was sort of the first example of it. And it raised $160 million in ETH contributions from members of the community, and then it was hacked. And so the community got together and basically said, okay, if like a huge part of the entire float of ETH is locked into this vehicle, which is controlled by some adversarial hacker, maybe we should roll back the chain, reverse that transaction and start all over again. And at the time, the vast majority of people in the Ethereum community agreed with this, but there was one group who said, well, we should maintain an original version of the chain. Blockchains are not supposed to be reversible, they're supposed to be immutable. So we're going to maintain Ethereum Classic. And Ethereum Classic today has like value, but it has no application ecosystem or no development of any kind. Having said that, like the Ethereum Classic does kind of have a reason for existing philosophically, which is that, it's true that at the time it was somewhat sort of contentious about whether or not to proceed with this rollback of the network. Today, it's different. Ethereum has always been on a path towards proof of stake. That's been part of its roadmap since day zero. The entire community is on board with this thing, with the exception of miners, obviously, because they've got a vested interest in the block rewards. So there's actually no philosophical justification for maintaining some version of Ethereum, which is never part of the plan. Like a proof of work version of Ethereum to continue on the way it is while the main chain moves to proof of stake is actually a pointless exercise. This time, I think it's truly pointless. And I do think it's the ultimate retail trap. Now, the key thing here is that if you're someone who owns Ethereum and there's a fork, you're going to end up with both versions. And weirdly, what's happened in this space before is that it's almost like a positive sum trade where, if you've got a thing that's worth $1 and it forks, you end up with $1.10. And the trick is to take the 10-cent thing and to sell it very quickly, because long term, it doesn't actually retain a lot of value. But it's not like if you think of a company that's being broken up into individual components, it may be that maybe the breakup value is worth more than it was as a single entity. There's like a conglomerate discount that can happen, but rarely do you see it something where just like all of a sudden you kind of conjure up some new asset that actually has real value. Now, the real risk here is that there are people who are getting behind the proof of work version of Ethereum and trying to pump it up. And they're going to convince people that it's the real Ethereum. And instead of people who already own ETH who are just getting a fork, people are actually going to take their own money. They're maybe selling the real ETH in order to buy this other ETH, or taking cash or stable coins, whatever, and buying this new ETH. That's the thing that's very concerning. And there's lots of people out there, low information investors, who may be convinced because some popular account on Twitter says that this new proof of work Ethereum is the thing. And all of a sudden, those are the ones who could get badly hurt. And there are examples of that with the Bitcoin Cash and Bitcoin SV, where people believed that Calvin Ayre and what was his name? The guy, like fake Satoshi, I can't remember his name anymore, were Bitcoin SV, like Satoshi's vision, and they got absolutely crushed by owning that thing. So it is a retail trap. It's something that I'm a little bit concerned about. I do think also that, like I've spoken recently with one of the key Ethereum core developers that's actually managing this transition. And, he's saying basically that actually a lot of the proof of work Ethereum people may believe that whatever mining is something that should keep going, but have they actually thought about how they would support, applications on this new network, how they would, manage the software component of this, or are they just interested in like maintaining hashing power so they can, keep earning revenue? So I think that The merge is, as we've said before, it's like swapping out the engines of a 747 traveling at 1,000 miles an hour over the Atlantic, filled with hundreds of people, without sort of upsetting the in-flight entertainment system or the drink cart. It's an incredibly complex undertaking and quite daring, and somehow everyone's on board with it in the Ethereum world. So this feels like kind of a pointless distraction, honestly, from something really important that's going on in the Ethereum community. So that's end of rant.
No, it's good. It was a good rant. I think, and what's kind of interesting too is it looks like the merge, like one thing that a lot of people are sort of pointing towards this whole Ethereum proof of work thing is that it heavily implies that that the merge is actually going to happen.
Yeah,
because if the miners who are going to be the most impacted by this are freaking out to the point that they're already essentially getting ready to launch their own coin, that sort of shows you that the merge is happening. We actually have a prediction market on whether the merge will happen on SX, and it's currently 60-40 on whether it will happen by September 23rd, which is actually pretty interesting because the closer we get to the date, the more likely it will happen, right? There's sort of like almost like a theta decay as we get closer and closer to the date, if there hasn't been a sort of an announced delay. So maybe that's actually a buy there. I personally have been buying a lot of no shares. I thought that the merge would be delayed, but give it another couple of weeks and that position may be fully underwater, which for me, I'll be happily underwater on that if the merge is happening.
You're hedging, you're probably like net long ETH anyway. So
yeah, exactly. I mean, we used to talk a lot about sort of Arthur Hayes. He would come out with these pieces. He actually came out with a piece last week, sort of a 40-minute read on why he's incredibly long Ethereum.
Yeah.
And he sort of he just does a scenario analysis and essentially looks at whether the merge will happen, as well as whether the Fed will pivot. And his 2 points are, if either one of those happens, Ether should essentially go up quite substantially in price. If the Fed pivots, then obviously the overall crypto ecosystem will go up, likely. But if the Fed doesn't pivot and the merge happens, then Ethereum should at least relatively outperform. And both happen, then that's just sort of a Goldilocks scenario for Ethereum.
Right, exactly. So we're setting up for that right now. I mean, we're seeing today like the early start on the macro side, and then yeah, you're right. Like, why would anybody be talking about POW ETH unless they thought the merge was really happening? Right. That's basically the key insight. I like that a lot. Okay. Yeah. Go ahead.
So I was just gonna say, I mean, one thing that was really big in the Ethereum community this week was the Tornado Cash, which is one of the largest mixers in the entire crypto ecosystem, was the software itself was actually sanctioned by the U.S. Treasury. Curious to hear what you think about that, and sort of what its implications are for crypto and I guess Ethereum as well.
Yeah, well, I'm not a legal expert, but basically, sanctioning is a very serious thing, and typically applies to individuals who are viewed to be a threat to the United States, whether they're enablers of Putin or the terrorists or something like that. Based on what I've read, this is the first time that a piece of software has ever been sanctioned, and that maybe the government is sort of confusing or conflating the idea of this thing called Tornado Cash as being some kind of like company or entity, right? When in fact it isn't. It's this open source thing that lots of different people contribute to. To understand what a mixer is, basically, it's a thing that allows you to essentially do private transactions in crypto without people seeing like the past history of what an individual wallet might have done, right? So there's lots of reasons why a criminal may want to use something like that, but there's plenty of legitimate reasons as well. In fact, Vitalik Buterin, the founder of Ethereum, said that he's used Tornado Cash to fund the Ukrainian war effort and Ukrainian humanitarian aid. And he said that, in that case, he doesn't really want the government of Russia and others to know that he specifically was doing that, but he decided to out himself in order to draw attention to this issue. And of course, there are lots of reasons why privacy is essential to lots of transactions. Like, we don't question whether or not an individual goes into the store and uses cash to buy something. Maybe it's a woman who's looking to buy birth control. She's worried about her, abusive husband or parents. Maybe it's someone who's getting a magazine subscription, in a country where certain publications are banned. Maybe it's them donating to a political party and they don't want to be singled out by an authoritarian government. Like, you can name dozens of reasons why anonymous transactions are sort of a legitimate thing. But that's sort of it's not beside the point. But the real issue here is, what does it mean for the government to basically like enforce a sanction on a piece of software? And it's really not totally clear, but there is some precedent throughout the sort of technology industry. So back in the 1990s, one of the key primitives of the internet and of the web browser was SSL encryption. Basically, the idea that you could end-to-end encrypt data packets that traveled over the web. So like your credit card information, if you wanted to buy something. At the time, that level of encryption was actually considered like a weapon, and it was illegal for individuals and companies to be in possession of that. And so early backers of the internet had to basically advocate to Congress to make it so that that type of 128-bit encryption could actually be used for commercial purposes. Now, at the time, the idea was, well, who needs encryption? Encryption's used by the military, and it's used by terrorists and bad actors. But of course, as the commercial web evolved, that became a key building block of the commercial web. If they had decided that Netscape Navigator, Netscape, and other companies at the time couldn't have done that, then the net would have evolved. The internet would have evolved very differently. So it kind of feels like we're in a somewhat similar position now, where generally speaking, the government has taken a pretty enlightened approach throughout history to not regulate, individual neutral technologies. It would be like, regulating saying the internet, you can't use the internet. The internet is illegal because, some criminal used it, or you can't use a screwdriver because someone stabbed someone in the eyeball with a screwdriver, or used a car to, stick up a bank and use it as the getaway vehicle. Like, these are neutral technologies. They can be used for good. They can be used for evil. So that's the argument that people in the crypto industry are making. And there was this very interesting thing that happened yesterday where someone who uses Tornado Cash started to basically send small amounts, relatively speaking, of ETH, a couple $100s, to a whole bunch of doxed wallet addresses. So basically, if that Tom Brady has an Ethereum wallet address, and people do know that, then you can start sending it. So all of a sudden, like, this person, I think in order to make kind of a political statement, was basically turned dozens of celebrities into people who were unwittingly, but were evading, the sanction laws. And so the question is, what happens to all of those people? I really have no clue where this all goes, but definitely, whether it was intended or not, I think it's being viewed as a real escalation in terms of enforcement of open source technology.
Yeah, no, I to be honest with you, I totally agree with everything you said. I don't have too much to add. I think you covered it pretty well. It's tough because I think everyone in the crypto ecosystem has been affected by Tornado Cash. And what I mean by that is, at this point, everyone in the crypto ecosystem has probably lost some money in a hack, at least if you've sort of put money into DeFi protocols. And the hackers always use Tornado Cash to launder the money.
Yeah.
So in a way, crypto people should be the people that are most sort of aggressive about wanting to sort of punish Tornado Cash. Yet those same crypto people are the loudest ones defending it. So I think that just goes to show you that it's kind of like, it's one of those situations where the people who have been most impacted by it are still the strongest believers in it. Which to me sort of reflects, I think it reflects sort of everyone's, I guess, worries with the sanctioning. It also just kind of sets a new precedent that a piece of software can be sanctioned.
Yeah.
And as Coin Center said, usually if you get sanctioned, it's an individual. So there's someone who can essentially appeal the process. Whereas if you sanction a piece of software, there's no one able to even appeal because software can't speak for itself, really.
Yeah.
So it's kind of interesting because it's sort of just like a blanket ban for U.S. persons to, and really anyone, to be honest with you, because no one wants to break U.S. sanctions.
Yeah, I'm a Canadian. I don't want to end up on a U.S. sanctions list.
Yeah, exactly.
Accidentally. Obviously.
Yeah, and then I think the other thing that's really, really impactful is the fact that the USDC actually froze $75,000 worth of USDC that was in Tornado Cash.
Yeah.
And a lot of people are talking about that in the future, wallets may have to build in the capability to actually refuse transactions, which is also crazy. I'm not totally sure how that would work. It'd have to be some sort of smart contract wallet. But it sort of implies that we may be entering into a heavily surveilled sort of crypto financial ecosystem, which would be there'd be far more surveillance than a traditional financial institution because everyone's details are public. So it's kind of I think it sort of sent everyone into a bit of a panic, definitely.
Yeah, I mean, I think for people who are listening from a traditional finance perspective, like just remember, like if you wanted to buy something, you wouldn't want the whole world to know that the bank account that you used to pay for that thing, every single transaction that it had ever entered into, right? Going all the way back to the beginning of time. Like you wouldn't want that. So it's good to have some level of privacy in transactions, obviously. And the same is true for transactions and other assets. If you're accumulating a position in a company as an activist investor, you don't want everyone to know every single stock purchase you've made. You want to do that discreetly. Like there's lots of reasons in financial services, whether it's for payments or capital markets or whatever, to do things privately and discreetly. So I don't think that should be controversial. Obviously, it's bad that criminals, can use this stuff, but this doesn't feel like the right way to solve for that problem. I think there's other ways. So anyway, it's a tricky issue. Like I'm not a lawyer. I'm not a policymaker. I don't envy the position those people are in. I think it is complex, but to me, it strikes me, at least on this issue, that sanctioning software feels like a step too far. I think that's it for us today, Andrew. That was a great chat. A couple of good conversation topics. I expect we'll be talking about Tornado Cash, the merge, and the macro situation some more in the coming weeks. We can actually have some really great guests teed up as well for later in August and into September. So make sure to tune in. We've got some DeFi innovators, a couple of other really smart people who will be joining us to make sense of what's going on out there. So thanks, and we will see you next time. Take care.
The information contained herein does not constitute an offer or solicitation by anyone in the United States or in any other jurisdiction in which such an offer or solicitation is not authorized, or to any person to whom it is unlawful to make such an offer or solicitation. Prospective investors who are not residents in Canada should contact their financial advisor to determine whether securities of the funds may be lawfully sold in their jurisdiction.